Hey, welcome. Welcome. Thank you for coming tonight. And take a look at some, while everybody's coming into the live stream tonight, take a look at this property that we just purchased. 501 units, Sawgrass, Florida, Broward County, 1,000 jobs a day. Welcome, welcome. Great to have you here. Look, we're having people join us tonight. I did this last Tuesday on a property that we purchased, and I was waiting to tell you this week about this property, but I couldn't announce it until it happened. My name's Grant Cardone. I'm doing this for you tonight to share with you because you've shown interest in our fund, you've showed interest, and or you've already invested with us. I can see some of you already here that are already getting checks from us. There's Brandon's here, Ryan's here, Frank. These are guys I work with, I spend time with. They get checks from me every month. They're investing with me. And for those of you who signed up for this webinar, or you've been on my Cardone Capital list, or you're a Cardone Capital investor, thank you for taking time. For those of you who don't know me, my name's Grant Cardone. I own how many units are we at right now? 5,600 units, 5,600, but I just slipped because I'll have 7,000 here in the next 60 days, deals that we have under contract. In fact, this deal, if Johnny's on me, I don't know if you can see this, Johnny? Is that down enough, Johnny, or is it shining?
I'll just pop it up on the screen.
Does it say under contract?
Yes, sir.
Okay, this was under contract until a few days ago. There you go. And we closed this deal on Friday, 501 units. Also, I need to say to you, over the last 25 years, I've been investing in real estate. I want to talk to you about why I did this and why I'm talking about this deal tonight. But let me take one thing at a time. First of all, I've been doing this for 25 years, investing in real estate. I have chosen apartments as the way for me to build wealth. I have 7 companies, one of which solely invest the money made from the other 6 companies. Anything left over goes into the 7th company and it creates wealth for me, okay? Of the 7 companies, I value the first 6 companies immensely. I work at them every day. I go to the office every day. I work my butt off every day, probably like you do. Any extra money for the last 25 years, I've been pouring into this multifamily. Multifamily means apartment buildings, large complexes, typically over 250 units, but we're averaging probably around 300 to 350. This property that I'm talking about tonight is 501 units. Very, very difficult to purchase. But first, let me talk about why this asset class, okay? Why this asset class? I've written books on buying apartments. I do a show every Monday on apartments. And I want to tell you, if you don't know why I chose this, okay? I'm not a Bitcoin miner. I don't know anything about crypto. I own some. I think about 900,000.
Yeah, you got almost a year.
And I own some, but that's not where I invest my money. I don't invest in stocks. I've had a little success in stocks, but I started with $3,000 in apartments 30 years ago. Yeah, 29 years ago. That $3,000 today is worth today $1.2 billion worth of real estate. So I started with one unit, $78,000 unit, and last week we closed $270 million worth of deals. When you registered for this webinar tonight, you agree to keep this information that I'm going to share with you confidential. We will be answering your questions. I'm only going to spend 27 minutes doing this tonight. There is a way for you to get invested with this, or you can call our office tomorrow and schedule a call. If you go to cardonecapital.com when this is over, you can go there and you can be like, I'm ready to invest, accredited or non-accredited, or hey, I have some more questions and I need to talk to a human being. And so I got people that will answer all your questions. Don't be surprised if I don't pick up the phone, okay? So it's easy to schedule a call. These calls are 5 minutes long, 5, 6, 7, 8 minutes long. If they got to go longer than that, you need to go do your due diligence, do your homework, okay? Don't believe one thing that I say. Go read everything that we say, everything about our fees, how I make money, what's in it for me, everything's there, okay? But why apartments, okay? Number one, the reason why apartments is I'm gonna tell you that the low end, what's your line, Ron, about the low end and the high end?
On rents?
Yeah, no, why apartments?
Oh, the baby boomers? And
The two biggest groups in this country, baby boomers, 75 million, and 80 million millennials, are all becoming renters. If you saw my interview with Yahoo Money last Friday,
Yahoo Finance.
yeah, it went all over the internet, went freaking nuts on the internet, went viral, okay? I was saying, hey, housing in America is dead. What I mean by housing, what we're doing right here, this picture of this property right here, that is housing. It's 500 units rather than one house. Those 500 tenants pay me every month. So when you do the math on the demographic trends in this country, and you look at the economic issues in this country, wages are flat, barely rising, housing's expensive, jobs are moving around, okay? We're probably going to robots. Amazon is building warehouses right here in Miami, in Atlanta, in Austin, in all the major hubs. They're surrounding them with big, massive warehouses that are going to hold supplies so they can drone to me and drop to my condo in literally in hours, not in 2 or 3 days. They're not going to, Grant's wants to wait 3 days for his Nike shoes, his Betsy Ross, before they take the Betsy Ross shoe off the rack. Dude, they could have already delivered that shoe to me. I'd have a collector's item now. Okay, so why multifamily? Because we're becoming a renter nation, okay? Because $1,700, $1,500, $1,200 a month rents, that's what we buy, is affordable to most people. If you come to Miami, this condo right here is $8 million on sale. It could sell for as much as $12 million. And everything next to me is gonna cost $4,000, $3,000 a month, $6,000 a month, $8,000 a month. I got a guy on 19s paying 30 grand a month. So, houses here, I'm surrounded by multi-million-dollar homes. I go this way one block. Those homes are 3 million, 4 million, 5 million, 7 million. Why am I telling you that? Because people have to rent. Period. End of story. You got to drink water every day. You don't have to drink wine. You don't have to drink tequila. You have to drink water. You got to eat food, and you need housing, affordable housing. This property that I'm showing you, can you flip through some? Okay, the rents on this property, I'd love to see your comments in the chat. I'm sure the chat's going crazy right now. Appreciate you chatting. Appreciate you following me on YouTube. Appreciate the follow on Facebook. And then if I could see some of that activity, showing the pictures. Those rents, our average rent there is what? $1,754. The property next door to me is $1,950 to $2,300. Okay, I'll be going over the opportunity, the financial opportunity in a second. Okay, but keep this in mind. I'm at $1,750 in this asset, $1,750, and I'll do this again in a second. And the guy next to me could be $2,300. So I know that there's a spread there. I'm gonna show you how that can benefit you as an investor when you register and come in, okay? Yeah, that's the neighbor, okay? Now, one other thing I want to answer, because people are asking me in the chat, why, if you're so rich and you're so successful and you're so this, why are you opening this up to other people, okay? I knew when I opened the fund up to other people, people would be like, oh, Grant is going to use other people's money and get rich. So without being arrogant, conceited, and obnoxious, folks, I bought a plane, I bought my own jet before I ever opened up Cardone Capital. Cardone Capital does not own the jet. I own the jet. Investors don't pay for the jet. They don't pay for the fuel. They don't pay for anything to do with the plane or my lifestyle. I had this lifestyle before I ever let anybody invest with me at Cardone Capital. The reason, however, and I do have a selfish, greedy reason for doing this, is because I can scale my business faster by letting other people in, okay? My choice was this. There's no shortage of money. I think everybody, if you've ever been following me, you've heard me say that over and over, okay? This money's already available. There's two sources of money. There's banks for the debt, and then there's lenders or partners for the equity. These are the two things that make up a real estate transaction. Debt is vital. I put debt first because the debt's more important than the equity. Okay, very, very important for you to know. If you're going to go out and do your own deals, create your own fund, buy your own deals, this number right here that nobody ever asks us about, only the really, really smart people say, tell me about your debt. Everybody else is like, tell me about your fees. Dude, you should be asking this. Tell me about the debt, tell me about the deal, the two Ds. Tell me about the debt, tell me about the deal, because the deal and the debt determine how much money you're going to make in a deal. All right? So the debt, we already get the debt. The debt, I borrowed the debt at 3.69%, sometimes lower. Okay, when I borrow 3.69 from a bank, or 3.7 or 3.8 or below 4%, we give 6% to our accredited investors over here with, if Johnny comes in the deal, he gets 6% as an accredited investor plus a partnership in the company. This bank, I pay them 3.6%. They don't get any profits of the deal. So you're saying, well, why didn't you borrow all of it? You can't borrow 100% of the money. That would be a bad thing to do. But what I can do is I can partner with people for the equity, this side, okay? Now, this deal that we're going to show you tonight, guess whose equity I used to buy that deal? I didn't go to a lender. I didn't go to a partner. I wrote a check. That's how much I love the deal. I wrote a check for what's the number? $51 million. And I'm going to go over all the numbers again. If you've been following me the last week or so, you saw me write a check for that deal, assigned to that deal. I sent a check to this bank to close this transaction on Friday. That's why I'm showing you this deal. It's not under contract. We closed it, okay? I cracked the lender. I didn't use the lender. And I could go to Goldman Sachs and say, hey, I'll put in $5 million. You give me $46 million, and I guarantee they'd have done it. Goldman Sachs would have agreed to do it. Blackstone would have agreed to do it. I mean, I could just go, there's 50 guys that'd be like, yeah, dude, we'll give it to you. But we want a piece of the deal. We need a percentage and a piece of the deal. And I'm like, you know what? I don't like the way you talk to me. This is what I got for you guys with your big ass buildings, your limos, and you don't work, okay? I'm gonna go to my friends on Facebook and Instagram, and I'm going to tell them what I'll do rather than you telling me what I got to do. And me, the little guy, I'm going to make the little guy money. That's how Cardone Capital works, okay? I am, number one, I'm going to scale my business. And number two, I'm giving this to the big guys. Until I get big enough and they're like, you know, Grant, is that a let's do more business together symbol, sign? Because they don't care, dude. They just need me to get big. As long as I'm little, they're just going to keep fluffing me around, right? When I get big, they'll respect me as a big guy, and then we'll do a big deal. So for right now, you're helping me scale. I'm going to help you. I'm replacing their money with your money. I'd rather do business with you. I'd rather help my sister, my brother, Johnny. I'd rather help you guys that follow me on Instagram. Whether you got $5 grand, $50 grand, $5 million, I'd rather help you guys than help Blackstone make more money, okay? So that's what's in it for me. Okay, the new deal. The deal we're talking about is 501 units. I might not have this in the right order. 501 units. I told you, two most important things, the deal and the debt. The deal and the debt. So I'm going to go over it, okay? I put $50 million down in my own money, if you can see this. We financed $93 million. I signed the debt, not you. My partners are not on the hook for that. So if Johnny Monday morning says, okay, man, this is the brochure. You don't get a brochure like this when you buy a house or a car. This thing's sexy. Okay, 501 units. How full are we right now? 92, 93?
No, it's 94.
94% occupied. Beautiful property. This week we'll be taking some landscaping out of the property. First thing. Okay, we'll be cleaning the property up. Beautiful property, okay? 501 units, 35 minutes from where I live right now. Jobs all over it, right outside the BBT Center that was all over TV this weekend, okay? $50 million of debt I signed on the deal, Okay, again, questions, we're happy to take your questions here. If I don't get to all of them, we can answer them at cardonecapital.com. You just hit a little button that says schedule a call. You can ask all your questions. If I bring up some questions for you tonight, you're like, man, he didn't cover that and he didn't cover that, cardonecapital.com/cardone that's it. And you just hit schedule a call. 5-minute call, ask your questions, and don't be surprised if I don't pick up the phone, okay? Now watch, check it out. 501 units. This is very, very, very important. If you said, I am going to build 501 units in the same neighborhood I just bought this, it would take you 3 to 5 years to get it approved. And I don't even know what it would cost you. I think it would cost you more than what I paid for this building. I think the replacement cost on this building would probably be $300,000 a door, $150 million, and you'd have to wait 3 to 5 years, and we don't know what happens with building costs over that period of time. That's important because when you come in, when you register and put your money in the fund, if you get your money in by Friday, you're getting paid next month. 30 days, you're getting money. Why? The deal's closed. This deal is closed. You put your money into a venture. Oh, Grant, we got this idea. We're going to go build 500 units in the same neighborhood. You put your money in tomorrow, you're not going to get paid for 5 years. You got to wait for them to build it. You got to wait for it to get approved. You got to wait for them to build it. You got to wait for them to fill it. You got to wait for them to stabilize it. How old is this?
5 years old.
It's a little less than 5 years old. It's stabilized already. Now what we're going to do is we're going to go in. They made their money on it. I'm going to go in and take it over, and I'm going to raise the rents. Okay, and I'll show you that in a second. And while you sit and wait, you're going to earn 6% on your money is our accredited floor for preferred investors, accredited investors. We have a preferred return of 6%. Okay, I think this deal goes to 8% in year one. It could go higher than that if I do a little tricky trick that we've learned from experience. Mixing up the special potion called the forced appreciation through value add operations, okay? We expect this deal to pay 15% a year when we're done with the improvements on the property. That means for every $1 million that you put in, you would earn, if you look back over 10 years, $1 million invested. If you look back, you'd be like, once I give you the final check, cash flow, everything, you're gonna be like, wow, dude, I earned $150,000 a year on my money. Got my money back, plus $150,000 a year every year while I own that deal, okay? All right, Ryan, anything I'm missing here? Okay, so am I committed when I write a check for $50 million? Kinda, okay? Am I committed when I sign a commitment to pay this money back? $93 million. How much interest only here?
5 years.
For the first 5 years, I get interest only, okay? So now let me show you where we think there's opportunity. It's called opportunity upside. We also refer to this as forced appreciation. Again, if you have any questions, if you want to schedule a call, you ready to put money in, go to cardonecapital.com. You got 2 choices, register or schedule a call. Our calls, promise you, every call tomorrow and the next day and the next day, there's 30,000 people that we have on a list, and we will fill this fund. Okay, so now 501 units. Now, why is that number important? Once you get a deal, location's got to be good, the property's got to be good, there's got to be opportunity there. This place cash flows at 6%. Remember this. We'll hit 6, right, Ryan? I'm checking with Ryan because I got a lot of deals in my head. I want to be sure I'm telling you the right thing. And again, anything I say right here cannot be used against me anyway because it's all in the prospectus. You'll sign this online. It'll tell you everything.
Year one target is 5.8. It's closest.
Good. I'm close to 6%.
Yep.
Okay. Now watch.
And that's
with the rents the way they are. Now, we think because of what our neighbor's doing and because of what their cost basis, this guy, when he built this, their cost basis was at a place where they could make their return without pushing the rents up. Landlords don't want to push rents up. I know everybody out there, if you rent, you're like, they can't wait to jam it to me. They can't wait to give it to me. They can't wait to stick it to me. Truth is, dude, they don't want to raise the rents. They just want to make money.
only the good ones.
Okay, they raise rents when they pay more to buy the property and need to achieve. When property values go up, new guy comes in, that's when rents get raised, right? Now watch. We think, based on the market, we did a lot of due diligence. I've been working on this deal 3 months, 4 months. We think, my phone.
100,000 per month.
This is 100,000 per month,
200, yep.
okay, per month,
Times 12.
which is 92,000 per month, times 12. Why is it 92,000? Because I'm never going to collect it all.
Let me do the
At 92%, a little less than what we are right now.
1.104.
This is 1.104. You're like, how do we make money, Grant? How do we make money on the deal? Okay, if you understand real estate, this is one of the reasons, not the only reason, one of the reasons I picked this asset class to invest all my money in. Number one, I get 6% in a real asset that pays every single month. As long as the cash flows, it pays, we distribute cash. As long as there's cash flow, I send it out to the investors. We paid $1.2 million out last month. So number one reason I invest in property is its cash flow. 2, it's real property. I can go see the property. 3, because of this right here, okay? Now, this little number right here, you're like, oh, you spent 100 some odd million dollars to make $1 million bucks? No. No, that's not how it works. I added $1,104,000 worth of value to this property.
I did 4.5.
Okay? You did?
That's what it trades for when we sell it.
I'm going to divide that by the cap rate. Can they see this? Okay. And that's $24,500,000. So I believe, and look, I don't know that. Okay. I believe if I can achieve this, I could go back to the market. Forget about anything. Just, I put $50 million down. I'm earning 6% a year. That's $3 million a year. Would you like to earn $3 million a year? This money will then get distributed to probably, 500 investors. Probably 500 people are going to invest in this deal with me. I'm going to keep money in the deal, okay? $50 million invested, earn 6%, $3 million a year. It gets distributed. If 500 of us came in equally, everybody would get an equal share of that. Watch this. Let's say somebody comes along and says, dude, I'll pay you another $25 million. I'll pay you your $50 million back, plus $25 million, and they would get the same return as when I bought the deal. I would make 50% of my money here, distribute to all the investors, and the $3 million a year that we collected here. That's if. Okay, a lot of arbitraries here. Can't promise you anything that'll happen. Any of that'll happen. I also can't promise you this. I'm going to move ahead in time a little bit. I'm going to go from 2019 to 2024. Okay, 5 years from now. 5 years from now, my interest-only loan has 2 years left on it. And is there a chance over 60 months that in addition to my little trick that I did by cleaning up the property, adding backsplashes, cleaning up the pool, treating people right, changing the name of it, taking out some landscaping, giving people great service, answering the telephone, calling people back, sending somebody over there to lease the property because we actually know what we're doing. Is there any chance that the rents increase by $10 a month?
Easy.
$10 a month? No. That's $120 a year.
It's real.
These rents are $1,700. They'll go to $19. Any chance that in 60 months, they would be $120 higher per year than they were when I bought it? $10 a month. It's only $10 a month. I don't know. Let's cut it in half. Let's say it's $5 a month. So it's $5 a month. What is that? 5 times 60 times 60 times 501 times 0.92 times 12. It's another $1,659,000. $1,659,000 in new income. If I divide the 1,659, I'm sure you can find 1,000 things wrong with what I'm saying right now, and divide it by the same 4.5, that would be $36,783. Okay, 36 million more. I give the 50 million back. I distribute 25 million plus another 36 million because I raised the rents $5 a month on top of that little enforced raise. The rents, based on this assumption, the rents exceeded the expenses and the property continued to operate and stay at the 92%. A lot of assumptions here, right? Now, you're going to say, dude, we're selling the property right now. Maybe, maybe not, okay? What I'm going to do is make a decision, probably in this case, to refinance my loan, send everybody their money back, and we keep the property, and we keep getting cash flow. Now, I've shared a lot with you tonight. I've been doing this 30 years. Okay, I know 90% of everything that happens in apartment buildings, 90%. I'm saying I don't know 100%, but 90% of the angles, I know. I'm still learning the other 10%. If you're just starting, one way to start is not to buy your own deal. One way to start is to invest money in a deal. Before the show, I want to show you one example of a guy that invested some money with me. This guy was investing in his own deals. Somebody just asked, hey, can I put SEP money in? Yes, we accept SEP money, IRA money, and KEO money. It has to be self-directed, and we can show you exactly how to get that money out of Fidelity, out of Schwab, out of, who would somebody else be?
TD Ameritrade.
TD Ameritrade, you got your 401k over there, you work for yourself. We can get that money out of there and invest it into real estate. Cash in the banks. Man, you guys get your cash out of the bank. You're earning 0.0025 and it's going down. This is going down. This is not going to go up. Okay, in Germany, people are being charged to keep money in the bank. In Japan, people are being charged to keep money in the bank. We're gonna go to negative rates. So this 6% that I keep talking about, dude, that is sick money. You're like, that's nothing, man. Bitcoin went up. Oh my God, yeah, it went down 3,000 yesterday too. So like it can swing, it has these big swings. This real estate that I buy doesn't have swings. It has income. The income takes the swing out, okay? Now, Ryan Secco, that's with me tonight, owned 21 units. He was flying my plane for me and said, hey man, I got 21 units. I got $400,000 or $500,000 worth of equity. And I immediately said, sell the 21 units, pay your taxes on the income, and invest with me. I knew you were gonna say that. Now, so many people would be skeptical. They'd be like, Grant just wants everybody's money. No, dude, I want Ryan to make more money. Okay? Ryan had 21 units that he was managing every day. I didn't want Ryan's attention on this bullshit, these little tiny units in Phoenix while he lived in Miami. If he has a plumbing problem at one deal, it's going to take his attention off his main job. I said, dude, get your 500 grand. He took $500,000 of equity, sold the 21, got rid of the problems, sold the 500, paid the IRS 100. Okay, he's like, hey man, should I 1031? Don't worry about it, it's too complicated, dude. Pay the IRS, take your 400 grand and put it in my deal. He's like, what deal? I have a deal that I paid $63 million for. Ryan asked a great question. I go from owning 100% here to 1.5%, whatever the number was. I don't know, it was nothing. I said, yeah, dude. He's like, I own 100% here. I said, yeah, 100% of everything. The debt, the problems, the phone calls, the plumbing, everything. Okay, over here, nobody's calling you, bro. We're gonna figure out how to increase the rents on $63 million worth of property and sell it for a profit. Ryan's 400 grand, how long were you in the deal?
4 years, 3.5.
Okay, 3.5 years later, I took his 400 grand. We sold the property. He earned $4,500 last month on that property. I exchanged into another property. He's got $1 million worth of value now, $1.1 million worth of value. His 400 grand has a value of $1.1 million in equity, but it pays him $4,500 a month. Now, if we just do that for 60 months, that's going to pay him $270,000 in the next 5 years. What would you do with $270,000, most of which will not be taxed? Because we're going to depreciate that big asset. I'm getting complicated. So again, if you have questions, if you're like, dude, I like this, I like what he's saying, CardoneCapital.com. You can register. You've already registered. So you just go there and say, hey, I want to complete the transaction. I want to put money in with you. If you're non-accredited, you can start with $5,000. If you're accredited, you have to start with $100,000. If you want to know what the difference is, you'll see the differences when you get to your operating agreement and subscription agreement. It goes over everything. It's called a PPM, and it will go over every detail, every question that you have. By the way, the best part of this story is that his asset today is worth $3.3 million. Imagine if Ryan died. Okay, if Ryan died. Okay, he should have a will or something that says, hey, if I die, man, this money goes to, who would you give it to?
My mom.
He'd give it to his mother. His mother would get a check for $4,500. She don't know what a property is. Every month, dude, she'd get the check for $4,500. Somebody said, Grant Cardone is banking that all these investors die and forget their money. Dude,
Rolls on to the next.
Dude, you don't forget the money. That's his property, okay? I'm not the state of New York, all right? It's his property. It's his property. He doesn't have to be alive for it to be his property. His will would tell me where to go with that money. We would send his mother the check for $4,500. As I raise the rents on this investment, guess what? Check goes up. Why would I want to raise the rents? Because the more money he makes, the more money I make. The more money the deal brings in, the more money we can sell it to somebody else, or the more money I can go to a Blackstone or a Goldman Sachs and say, look what I'm doing with my portfolio that isn't 5,500 anymore, or 10,000 units, or it's 20,000 units. So last thing I'm going to tell you is this, okay? This is a bit of you using me and I'm using you. Okay? This is you and this is me. Why are you using me? Because I get the deals. I sign the credit. I get the best deals. And nobody gets better deals than me. You get a better deal than me. If me and you are on a deal and you beat me on that deal, dude, I guarantee you, you are freaking good. Okay? I do the credit. I do the management. I get the best debt. I don't use any of your credit. I know some of you watching got bad credit. I don't check your credit on this. Boom, you're using me. Now watch how I'm using you, okay? I'm gonna go get 20,000 units. 20,000. And I'm gonna figure out how to raise these rents. $5 a unit. Across 20,000. I get a piece of that, by the way.
It's $100,000 a month.
It's how much?
$100,000 a month.
20,000 times $5 a month. That's on top of whatever we're making already, times 12. Okay?
24 million if you divide it by 5.
Huh?
24 million if you divide it by 5.
It's $24 million. If it's only $5 a year. Right? $5 a year, $5 a month, $5 a month. So, look, there's scale. You help me scale my portfolio. But what if I can make $50 per unit? What if I can make $100 per unit? You just start like, wait a minute, you're going to become a billionaire. Yeah, I am. So right now we have $1.2 billion worth of real estate right now, 5,400 units. Okay, if I go to 20,000 units, I can't do that by myself. 7 billion people on the planet. They're in Europe, they're in Mexico, they're in South America, they're in Australia. I'm getting ready to go to Australia, New Zealand. 1.2 billion. If I go from 5,400 to that, that'll be 5 or 6 billion right there. So if I just own a piece of the 5 or 6 billion, I mean, something big gonna happen for somebody. So you can be involved. You can work with me. You can partner with me. I'll never let you down. I would tell you I am the best buyer, negotiator, apartment picker in the world today. I am modeling other people that were extremely, extremely successful. Sam Zell's worth $5 billion. Donald Brin's worth $12 billion. Man, there's so many people that have made fortunes, like fortunes in this exact kind of investment that we're talking about that you see the pictures of. So I want to close with this. You go to cardonecapital.com, schedule a call, cardonecapital.com to register, get your money in. If you've already invested with us, I can tell you, I believe in the last two deals. I closed a deal in Laguna, in Naples last week, $100 million. This deal, $140 million. I promise you these deals are going to be great deals. You're going to look back later and say, Grant, why didn't you push me harder? Why didn't you tell me to put more money in the deal? Guys, I'm just telling you, man. Don't listen to what I tell you. Watch what I'm doing. Okay, I put 50 million of my own money in this deal. I'm all in. Okay, if you want a piece of it, grab it. It's going to be open for the next week for you to come in. I think we're about 40 or 50% filled on this, Ryan. Is that right? On this deal? I don't know. We're some port. We have a big commitment.
Yeah, well, we have $25 million now in
Okay,
commitment.
25 million of this is committed for, so I can't give it all away. Some of it's already committed to because of previous investors, people that have already come in, both accredited and non-accredited. For the non-accredited, let me give you a warning. I cannot promise you that I will ever be able to do another non-accredited fund again. It's up to the SEC whether I'm approved or not. Number two, dude, it's a lot of work. It's a lot of work taking calls from people that have $5,000 because so much uncertainty. I know you don't want to lose your money. If you don't want to lose your money, get it out of the banks because you're losing money. Get it out of the wall in your house. Get it out of the mattress, okay? Stack up $5,000 and put it in these deals and wait. Our average non-accredited investor puts in $22,000 and they're never going to lose anything. I believe that with 99.9% of every molecule in me, you will never lose a penny here. Number one. Number two, you will get paid every month. Number three, the next time you see this money, it'll be double or triple, but you need to go read the data. Yes, you have to do something. You got to read the data, you got to write a check, and you got to get your money in, okay? Get your money in this week. You get paid what, next month? Middle of August?
Yep, middle of August.
Middle of August. Get your money in this week. You get paid in the middle of August. Be the first passive income you get from this deal, and that will continue forever. When I distribute to you, I can distribute to me. It's one of the agreements. When I distribute to you as an investor, I distribute to Grant as an investor, and I love being paid every month. Okay? Risk. Oh yeah, I got to tell you the risk, the disclaimer. You can lose all your damn money. You know that. As any investment, okay? I can't promise you that I can hit these numbers. I can't promise you that I can do 30 and 40% on these deals. I can't promise you the 25 million, the 26, the 30 million. I can't promise the 6%. I can't promise, but that's what we're shooting for, okay? The disclaimer I'm telling you tonight is this. There's risk with all investments. I can't promise you I can hit these numbers. I can tell you, all my money's in these deals. When I buy this deal, I tell my wife, this thing's gonna make us a lot of money. Can't promise her that. But that's why I did it, because I believe it's going to make us a lot of money. And most importantly, I believe that if I'm not here to take care of my wife and my kids, these properties will take care of my wife and my kids and my charity for years to come when I can't, okay? CardoneCapital.com/hit register, CardoneCapital.com to schedule a call if you need a phone call. Okay, Ryan, we good? Nexus just closed it, okay? Show them the pictures.
Yeah.
Dude, the thing's sick. I'm so proud of this investment. Nicest property I've ever bought, and I buy nice stuff.
Hold it. And we're closing it right now.
Thank you for coming in tonight. Did they dump out? Hey, by the way, anybody that comes in tonight, what can I give them? Cardone Capital or cash flow hat. Anybody that comes in tonight, Cardone Capital, cash flow hat, okay?